Is Palantir stock at $82 a buy before the earnings? That's what I'm going to cover in this video. Let's look at what they have guided for in Q4 of 2024. They said they can make revenue between $767 million to $771 million. That represents 27% year over year growth based on the $609 million they made in Q4 of 2023. For the full financial of 2024, they're saying they can make a revenue of about $2.8 billion. Based on the financial of 2023 revenue of $2.2 billion, that's about 26% year over year. Let's look at how they have done in the past with respect to the earnings. As you can see on the screen, for the past 4 quarters, they have beaten the revenue target as well as the earnings per share estimates. The EPS beat was much better than the revenue beat. So it's likely that they would do the same again for this quarter, Q4 of 2024. But the more important part is the guidance. The stock ran up a lot. It's a $180 billion market cap company with revenue of $2.8 billion. So that's a price to sales of 60, which is ridiculously expensive. So a lot of people are looking forward to a much higher guidance of like 40% year over year or so. But for me to determine if this stock is a buy or not, I need to look at some valuations. I'm going to show you 3 valuations, and based on that you can determine whether this is a buy at $82 or not. For my case, I will look into a valuation and tell you what I'm going to do at the end of this video. It takes a lot of effort to make these videos, so please consider liking this video and subscribing to my channel. Let me first show you the valuation 1, in which I'm estimating that the current growth rate will continue more or less. So as you can see on the screen, in 2024 they made about $2.8 billion of revenue, and in the most recent year they grew their revenue by 26% year over year. But since there are AI tailwinds, I'm estimating 30% year over year growth for the next 5 years, with which they can make close to $10 billion of revenue. And Palantir has gross margins in the order of 80%, so for a SaaS business it can get to 30% net profit margins. So I'm estimating 30% net profit margin, with which they'll make close to $3 billion of net income by 2029. Normally I assign a multiple of 40 or 45, but since Palantir has a lot of following and it has lead in what it does, I can assign a multiple of 50. With that, this company would be worth about $156 billion in 2029. Currently they have close to 2.5 billion outstanding shares. They are diluting their shareholders and also announcing some buybacks. They have some cash as well, close to $5 billion. So I'm estimating no dilution. With that, the stock price in 2029 would be $62. Based on the current price of close to 80, that's negative 22% return in 5 years. So if the current growth continues, I'm going to have negative returns in 5 years, and that's not good. So we are desperately wanting Palantir to guide for something much higher than 30%. So a lot of people are talking about 40% growth rate they are expecting, right? And if they announce 40% growth rate, that's a huge acceleration from the current growth rate of 26% revenue growth rate, and the stock is going to spike. But let's see what 40% revenue growth does to the valuation. So this is valuation number 2. As you can see on the screen, I put 40% year over year growth, which is very hard to do because currently they are having quarterly revenue in the order of 700 million. So it's easy to grow 40% year over year when you are in the 700 million range. But once you get to a few billions, it's very hard to grow at 40%. Yet, I'm estimating 40% revenue growth rate. With that, they will make close to $15 billion of revenue. From the current year, 2.8 billion to 15 billion in 5 years. So that's almost like 6 times the current revenue. So that's a big leap. And I'm still keeping the same 30% net profit margin, and I'm assigning a multiple of 60 because if a company grows this fast, people are going to pay up. So with that, the stock price in 2029 would be $108, and that represents 36% gain based on the current price of $80. And that's not attractive for 5 years, right? So even if they guide for 40%, that's not attractive to me because the valuation is assuming 40% growth rate for the next 5 years on an average, which is very hard to do. even if they announce 40% this year, it's hard to grow 40% year after year, year after year after, because the growth is going to reduce as they get bigger and bigger. But I'm also assigning a multiple of 60, which is unheard of. So for a mature company, obviously. So 40% growth rate, even if they guide, I'm not convinced that it's a good risk reward, because I'm only looking at 36% reward. So let me look at what has to happen for me to double my money from $80, because in 5 years I want at least get a double, and for that what I have shown in the screen should happen. They should grow their revenue by 52.5% year over year to make close to 23 billion, from 2.8 billion today to 23 billion in 5 years. They have to have 35% net profit margin and Nvidia like multiple of 50. If all this happens, that's when I'm going to double my investment. So the stock price will be $162 in 2029. And I think what I am showing now is an impossible scenario. And I will go with the valuation in which the current growth continues. So in which I'm looking at a negative return. So I'm not going to buy Palantir at $82. Let me know your thoughts in the comments. Thank you so much for watching.